Good morning.
I'll say good morning. Good morning.
Good morning. Good
Good mor
morning.
good morning.
Wow, you
Yeah.
look sleepy, Paul.
Oh, it's just because I just got out of bed.
God, it's
Oh,
eight. God, it's 8:30
Morning.
there.
Mhm.
It is
is
8:30.
it? Hey, Steve.
Good morning.
Good morning. All right, we're gonna give it about 1 or 2 more minutes. Good morning, Janet.
Good morning. I prefer to stay off camera, Monday morning hair.
You look
Oh,
great.
You look
You
great.
look great.
I have that same problem.
Yeah.
I can tell.
So,
Yeah.
my wife
That
lets me know when it gets
it's
long.
that it's
I
that
wish
darn
I
sun.
had
It's that
that problem.
Yeah.
I
it's gonna
lost that
tell
a
you
long
to
time ago.
dull
Yeah.
down that shine a little bit.
All right, Mark, you ready to get going? We're
Yeah,
gonna
we
try
got
to
30 minutes here.
we're gonna try and crank this out in 30 minutes. This being the first one, we're sort of playing it by ear. So if Mark and I go over just a little bit, we're trying to keep our segment of to 10 minutes, and then we want to open up to the floor, discuss what you guys want to discuss, and go from there. So, Mark, you're
All right.
on.
Well, good morning. Today is Monday, March 3rd, 2025. So welcome to our new little, I don't know if you call it a podcast or whatever you call it, Morning Edge, presented by the Platinum Channel. We want to provide kind of a window into the trading day, not only from our perspective, but from your perspective too, and what you're looking at. So just a reminder, this information is for educational purposes only, not financial advice or a recommendation to buy or sell stock by anybody on the whole channel. We're just sharing information basically. This morning, futures are up as markets look ahead to remarks from uh, Chairman Powell today and other Fed officials. Got earnings reports from several high-profile companies this week, as well as a slew of economic data, with particular focus on Friday's non-farm payrolls report. Markets will also focus on earnings report from companies like Broadcom, CrowdStrike, Hewlett Packard Enterprises, MongoDB, Marvell Technology, along with retailers like Target, Costco, Best Buy, and Macy's. Those are all scheduled to report this week. So we still are in earnings season. It seems like it goes on forever, like an NBA season, but it goes on, and we have to deal with it. The momentum watch list. Yesterday, I put out two watch lists on the charts of interest on the Platinum Discord. We had the momentum watch list that included 16 stocks, and the under 200 watch list that included 10 stocks. So be sure to check those out on the charts of interest Discord under the Platinum channel. I'll go over a few of those on each one, and then a few that I see this morning, and then I'll turn it over to Trent for a little bit, and then over to you guys, and you can let us know what you see. So hold on here, and I'll switch over. So on charts of interest today, let me.
We just gave you
Okay.
access.
Yep. Right. Out of the momentum, we had 16 charts on momentum list, and the momentum list is where you see a lot of price action momentum between basically the 9 and the upper Bollinger, and sometime outside. What we don't have is a real line of resistance, which I call the green line of death. It's not there yet. It can show up at any time, but as long as you have momentum, you have the possibility to make some money. So you'll see on this chart, this is LNT. This was on our list. It's following up between the 9 and the upper Bollinger. And you've got some sell orders up here at 65.35. So this is an example of momentum. We also had, I'm only going to do a few of these because we had 16. Marsh McClellan, what a nice little run this is, between the 9. Still momentum. You're up high on this Bollinger Band. You can see it does pop down. If you're interested in stocks like this, I always try to get it on sale a little bit. If you're going to buy, put in a buy order. Always check your oscillators down here, which are all doing well. And we have some sell orders at 240.88. And all these charts, as of yesterday's charts, are on the Discord, and you can take a look at that on the Discord from yesterday. And one last one, AON. Okay, AON has been a nice run on the momentum side. Again, we've got some sell orders up here at 413.43. We're currently at 409.12 before the market opens. Again, watch these Bollinger Bands. They only trade outside of these Bollinger Bands about 5% of the time. You may be able to get a better deal if it wicks down, but always watch out on these charts because all of a sudden you may get a intermediate resistance level like happened. You can go back last week on the chart that was there, EVRG. Okay, and you can see what happened. This is when we put it on Monday, and then by Tuesday, Wednesday, we had this resistance level, and you can see we never really have gotten past it all the way through Friday. So again, it did go up touch on some sell orders, but this can end your momentum pretty quick, and you can see that in the oscillators too. So that's your risk on a momentum stock. So just be careful on those. Paul likes to trade them a lot. Paul was really good at watching these and make sure they don't get out of control on him. So if you have any questions on momentum, Paul's a good place to go. Under the 200, these stocks trade under the 200. Okay, the 200-day moving average, which is normally it's in a bearish mode. As you can see, we drop down on earnings, but you can make some money as you see the 9 comes down and we start catching the 9. We're still under the 200. In this particular case, you can see the Bollingers came right down, boom, and now we're starting to see them spread apart a little bit. So like on UPS, you go down and you look, and your oscillators look good. You're just under the 50, and you're under the 200. Here you got some sell orders at 120.63. As of close Friday, we're at 119. So these have some opportunities. This one's been slowly flighting up, and it's going between the Bollinger Band and actually the 20 right now. So there's one from yesterday's list. FDX is another one that falls right under. That's Federal Express. This one hasn't quite cleared the 9 yet, but we have some good oscillator action down here, and we have some room to run on the top. We can get past that 9 in a manner all the way to 268.27 on this particular one. And then the last one, this was on the list from a week or two ago, and this is Portland Central Electric, and we put it on back here on the 18th. You can see it's rode the Bollinger Band. And these Bollinger Bands are interesting because very rarely do I see it trade outside of the Bollinger Band more than 5 days in a row. So we had 1, 2, 3, 4, 5, and then it pulls back in, hit down here on support and pop back up. Now you've got the 200 right here. It's going to provide some resistance right next to where you have sell orders. If it can bounce, I imagine this will bounce up here for a while. If it can get past it, then you've got a pretty good run up to 47.71. Always watch your oscillators. But again, below the 200, this one's getting pretty close. So those are just 6 of them off the list that I put out yesterday. And you can go look at the list. We can discuss any that you want. Today, I'm looking at, if you looked over the weekend, what happened in the crypto world. Here's Bitcoin. Again, here's a Bollinger Band. And last week I said it doesn't trade very often, more than 5 times. So 1, 2, 3, 4, and it came back in. Okay, and then we went sideways, and then we had this weekend. Again, I said my line in the sand was the 200. Okay, now I accumulate Bitcoin myself, so I put in some buy orders at the 200. It did go below a little bit, but I got a little more accumulation. And here we are today on Bitcoin. You can see the oscillators and the MACDs going back up. Very volatile, but I accumulate Bitcoin. This will also affect, I know some of you are into MicroStrategy. And MicroStrategy did the same thing, came down, hit the 200. You can expect probably following Bitcoin today, MicroStrategy, IBIT, Coinbase, they're all going to be probably moving up today, but be careful. Some of the others that I saw that are interesting, SoundHound, okay, I usually like to have a full candle close above the 9. We're above the 200. You can see it had a big drop. This one here has some resistance at the 20, and we also have 1379 will be where you find resistance. But again, we're seeing some turnaround. I like to see a little more on the MACD down here, but we're seeing a little turnaround. Would I buy it right here? No, but you have some room to go. Of course, one of my favorites that's been on for a while, Berkshire B, just continues to roll up the Bollinger Band. Again, I expect this to pull inside this Bollinger Band, but everything looks good still on Berkshire. I would, if I was trying to get in here at this point, I'd certainly want to wait, get it a little lower, but it's been on a pretty good tear. And one that we had last week too is PAYC, Paycom Systems. Once it got above the 9, it's a nice little slow run up. And again, it's going between the 9, the upper Bollinger Bands. You have some sells at 225.87. Oscillators still look pretty good. So again, those are the kind of things that I look for. I have a different list, but I don't want to take up too much time. And I want to turn it back over to Trent now, and then we'll have questions afterwards. Trent?
Yeah, so this weekend I saw an interview with or a clip of it, and I've posted it here in the chat with Treasury Secretary Steve Bassett and about their approach over the next 3 to 6 months. They're basically what they're trying to do is instill confidence back into the U.S. Treasury yield. As you have probably seen and we've talked about, U.S. Treasury yield had got up to 5%. Now it's at 4.2%. Why is that so significant? Because most mortgages, commercial real estate, commercial loans, pretty much every loan possible is benchmarked against the Treasury. 5 years ago, you could get a Treasury at 59 basis points or so, plus the spread of the bank, and that puts you at a financing rate of around, in some cases, less than 3% for a mortgage, upwards of 5% based on credit quality. Those things have changed in the commercial world. That 5-year number or 5-year loans from commercial and institutional borrowing is coming due. So their goal is to, one, cut spending. We're seeing that with the DOGE program. They're trying to cut government employee count. As Mark and I have talked about over the last couple months or year, really, the jobs numbers have been heavily driven, probably 95% by government employee hiring. They're trying to reverse that or are reversing that. And so they're cutting out some of these other special programs that will put a lot of pressure on the lower and middle class. The goal is to get that yield down. The goal is to create confidence back into the U.S. Treasury and have money flow come back in, which we're seeing. The problem with that is, where does that money come from? Well, we've been on a run for 2 years, and we've seen that in the S&P the last 2 years of 20% plus returns. That money is starting to flow out of equities and now back into confidence, or hopefully instilling confidence into the U.S. Treasury market. Their approach, according to Treasury Secretary Steve Bassett, is, one, to cut massive corporate tax cuts, cut the IRS and corporate financial oversight to reduce taxes further, deregulation on corporations so that corporations can spread their wings again and start to innovate and grow. And of course, the whole drill, baby, drill, drive oil prices down. And what their belief is, in the next 3 to 6 months, you can see pressure on equity markets, pressure on the economy, and you're going to see a lot of people freaking out about it. The goal is to switch all of that dependency from government to private sector. Private sector gets strength, they get ability to spread their wings and grow, they start hiring, and we see the unemployment rate start to drop, and we start to see inflation possibly drop lower towards the Fed's target or 2% rate. So what that says to me is, one other element is, when you see this pressure on the consumer and on the average Jane and Joe, they'll come in, instead of with quantitative tightening, they'll come in with some level of quantitative easing. So in putting money back into the economy, giving us the ability to go borrow at lower rates and re-energizing the housing market and a handful of other things. What does that mean to you and I on this channel? It means we should expect equity pressure on the equity side, on the downside, and there's many ways we can manage that risk. We can manage our time frame from a long-term standpoint to a more shorter standpoint, take profits when we have them. We can move equity, redistribute our portfolios from a high equity allocation to maybe take advantage of a falling U.S. Treasury yields through ETFs, IEF, TLT, and a couple others, and take advantage of that yields going down and values of bonds going up. That's an opportunity from a risk management standpoint. But and we're also seeing a restructuring of capital, refinancing of capital. So we're going to see that happen. But I think this is a time where we become cautious. We sort of protect our assets. We put in a risk management process. We know when to say when. You can still be a long-term investor or a short-term investor, but losing money is really not what we want to do. So we're in that environment where we're going to see volatility jump. If you look at the VIX, VIX, you're seeing it if it went over 20 this past week, which is a volatile sign of the S&P 500. If we see that stay over 20 and get in between 20 and 25 or so, they call that the chop bucket. This is where you can get your face ripped off real quick. But if we go over, say, 25, 27, then we get back into what we saw during the pandemic, at the height of the pandemic, at the height of the housing crash, .com crash. So keep an eye on volatility. Use the VIX in this case is represents the volatility of the S&P 500. The other one is VIX, which is the volatility of the volatility index, which can be an indicator as well. And I will post up on the Platinum channel later today a ratio between VVIX and VV or VIX, and it'll give you an idea of that ratio and what it indicates and can be telling to us in the future when it comes to volatility overall. So yeah, it's in an interesting environment. You can make money in this environment. Just watch your back, protect your six. All right, so let's turn it over to you all. What questions do you have? What companies do you want to talk about? And anything the floor is open.
I have a game plan.
Oh, what's that?
I have a game plan for today. I could tell you a little bit,
Yeah,
if you don't
please do,
mind.
Paul.
Uh,
Yeah, please.
so the Trumpster is not supporting Zelensky anymore. So the European defense stocks went up crazy last night, and a lot of defense stocks did well last week. I played into the higher momentum defense stocks, so I'll recommend RTX because
We're not recommending. We're
whatever. Yeah, for
ideas.
me, I
Ideas.
use I statement. My idea.
Okay.
Sorry.
Right.
RTX is a good idea, but there's a slew of them. But RTX, I like. In the
RTX. Okay.
money's been also in a slew of financial, and specifically in the insurance. And I got like 10 of them, but I like PGR. Probably because I watched 60 Minutes and there was so many commercials, or there was a show that I was watching. I can't believe how many commercials. They're marketing like crazy. So PGR is a good one. In the healthcare, it's kind of been wishy-washy, but the favorites are ABBV, and Abbott Healthcare. Again, you're not going to go wrong with the financials.
And all these, all these are on our momentum list this week too.
Well, I have a list myself, but okay.
I'm just saying it.
Yeah. So, and also for healthcare, which again, wishy-washy, ABT and ABBV, and we don't have to go through them. These are, if you look at them though, they meet a lot of the requirements, not only from technical, but there's also support from a fundamental and market sentiment. So they have great fundamentals. There's a lot of sentiment around them, and technically in a good place. So that's all I have.
Okay. And again, you can go on our Discord, and all of these are on the momentum list for this week, and look at the charts before market open. And you're looking at one right now. Well, not yet, but like
Hey,
here's
Paul.
Yep. Yes.
Real quick, what's your time frame on these?
Well,
Just short-term trades?
no, my time frame is a function of where the money goes. So I keep a watch on financials. So money's been going into financials and insurance, and
Okay.
on a slew of stocks. So for financial PGR, well, you're in RTX. RTX, that's a, I think it'll, my time frame, as soon as I see sideways actions or I seen it plummet down a little bit, maybe 2-3%, I'll be out. But I've been riding RTX
Okay.
for a while now.
Okay.
It's a great, again, it's defensive and it's at a 52-week high. So it's got a double header. Versus if you go to Lockheed Martin or Northrop Grumman, or you go to, AG Harris, you go to all those other ones, those are nowhere near their 52-week highs. This is doing well regardless. Even if defense stocks weren't hot right now, this would be going up, I think. As long as the market's going
Mhm.
up and you don't show the comparison, you should. But so that's my 2 cents on RTX. In insurance, I mean, many of the stocks that are hitting their 52-week highs in insurance, and I like PGR just because, frankly, I'm not in it, and I'm in all these other ones like AALN and Axis, and I don't, there's so many of them, but they're all hot. They're all very hot right now. So that is another momentum play. But if you were to fan out and look at this from a year's, PGR is a pretty good stock tone anyways. You're not gonna,
What
you're
is
not
what
gonna,
is causing the flow of money into insurance, do you think?
the value. These are the low, really financials. Financials is where the money's going, but insurance
Same with
specific.
Berkshire.
Yeah, Berkshire's a big
Yeah.
owner of insurance companies and type
Yeah.
that type of, yeah. So money's going there. I mean, Berkshire is not a bad play because Berkshire's in that same list of financial type stocks and insurance and big breadth of a lot of different money making places. So
Mhm.
you won't go, even if you bought a little Berkshire, you'd be fine. And then I like to look at favorites of the health of each sector. So I mean, yeah, the financial insurance is hot right now until it's not. And I mentioned
Mhm.
defense is because what's going on in Europe, and then I mentioned healthcare too because there's a little ABT and Abiv are both, you want to be a little bit in healthcare because, and those are very reasonably valued companies. Like those are, and you see the Bollinger Bands are widening there. It's a good sign. That means it's kicking up. I like that.
Okay.
Uh,
One thing that I always watch again is watch for when that resistance line pops in, like it did last week on EVRG, and I can slow your momentum really quick. So
oh
that's my only
yeah, yeah.
cautionary. It's my only cautionary on momentum stocks.
And
Yeah.
that last one, and if you want a plain Jane, you go to Visa. You're not going to make a lot of money, but it's a really low risk. Those are tiny candles. Can't count
I think
Friday.
on credit cards in general, I think that the caution is the delinquency rates that are coming. How does that factor into first quarter earnings when we see that reporting in second quarter? I think we're going to get a better insight on the credit card companies because delinquency rates are so high, which could actually create more opportunity down the road as we see sort of this reset in a sense when it comes to debt. We'll see, but yeah. Um, I did a video this morning. I'm trying to do one in replace of Carrie while he's on vacation on BBAI. This is a BB
Yeah,
Bob.
but that's a different world. You just entered a whole different world.
Yeah, well, I like this opportunity.
What
They
was
got
what?
crushed.
What's the symbol?
Boy,
BB, boy, AI. They got hammered this past 2 weeks, as did most of the tech related companies. It's come down to a level of support, I believe. They just got a deal with the Department of Defense for $165 million contract. They have a new CEO. Last name is McAllahan. He was part of the Trump presidency administration back on the first term, and he just recently became CEO here. This is more of I'm looking at it from say a 3 month perspective, as we see more and more efforts and money flow into border control, military spending, that kind of thing. This is a company that will capitalize on that. They're a $5 some change stock right now. They were up 400% last year. I believe all that's come down. So this is more of a 3-month period of time I'm looking at. I'm not looking at it from a swing trading perspective. I'm looking at it from a opportunity to capitalize on government military spending. And they're in similar category as Palantir is. So take that into account as well. So this is a intermediate term long idea.
Yeah, but Trent, this is when you want to say this is not financial advice because
This is not
an a whole,
financial, but thank you,
this is
Paul.
a crazy
Thank you.
speculative stock. I'm telling you right now, compared to the ones that we were looking at, this is very speculative. I don't think
Totally.
they
I
make
mean,
money. They don't make money. I mean, we should
no,
probably
they don't
be
make
talking
money
about
at all.
adverse. Those other stocks are, make a lot of money
No,
and they're established. Yeah.
my price target on this is around $7. So that would be roughly a 44% return on the money. So this is a speculative position. This is not a recommendation. Yes, Paul, they don't make money. Yet what I see the connection opportunity is, one, they've got one of theirs at the helm now. They're focused on military products or services that we're going to see more and more of. So this could be one of those situations that could turn out to be a nice trade, or in a long term or intermediate term could be a nice investment. So take that account. They're not profitable. You can check out my video this morning on it, and I go through all that. So, but yes, right, you're right, Paul. They're not profitable. They don't make any money, but that could change. That is projected to change in the near future.
I'm just
So
calling you out because you called me out, and
I know you are, Paul. You scratch my back, I scratch yours. There you go. All good. Anybody else got anything they want to hit on?
Well, I
about
was
2
interested
minutes.
in the digital asset framework that Michael Saylor presented to the department,
Yeah.
U.S. Department,
Yeah.
and pretty much interested in the framework in reference to I think he gave out 6 types of digital assets, and of course, the commodities being the Bitcoin and securities. I think they fall under Ethereum. But the other one is the digital currencies, which includes digital bank, the CBDC. What do you think the impact of that will have on banks?
I think I'm going to do a real quick one, but I don't think that this administration is going to allow, the bank coins. I think what they're looking at instead are the stable coins. And Trent, you know more about that than I do, but
Mhm.
it seems like there's a lot of stable coin legislation, pro stable coin stuff going through right now.
Yeah, there's a podcast called the All In Podcast. You can check it out. In the last, well, this year really, they've talked a lot about stable coins. They had the 2 guys who started Stripe, which is a private company still, and there is talks about them. Stripe is a payment processing company, and so they're talking more about stablecoin usage and using that as a payment service. It basically, it's the ability to transfer money in in seconds, versus the present SWIFT system, which is how we transfer money throughout the world right now, which is more on a day system. So it takes a couple of days to move money around. Stable coins is more cost effective for the consumer or the person using it. The threat is with banks is that they're not a part of it. And so that takes profitability away from them. So I do see that becoming more and more of a part of the financial framework of the world. If I can transfer you money, it looks like you're in San Francisco, I can transfer money to you in the old system. It would take a day or 2 for you to get it. Instead, with a stable coin system, I can transfer it to you. You'll have it in probably 2 minutes. And then you basically cash out of it, turn that into US cash, and go about your day.
At a lower
So I see it.
transaction fee too.
Yeah.
That's that
Yeah.
XRP you said?
XRP is
Ripple
one.
is
Yeah, Ripple.
Ripple is the framework. So for
Mhm.
instance, American Express was a bit early adopter to that. They use it as infrastructure. So think about XRP, Solano as companies who are building the framework infrastructure to build other financial systems or utilities on. Tether, I believe, is a stable coin. US, hold on a second, let me see it. USDC, I think it is another stable coin. Tether has had a sort of a history, so be aware of that. USDC is the other stable coin that's more
Mhm.
readily used as well. So I think it's going to become a part of the financial framework of money movement. Especially, the guys on Stripe, they were on the All In podcast 2 weeks ago, I believe. And these guys are young guys. I mean, they come on, you're like, wait a second, that's, you're like maybe 22, but they're geniuses and they've built a major system that moves about $1 trillion around a day. So that's up there with the Bank of America's, the Chase of the world. So they're becoming a major player. And so I think you're going to see more of adoption in stablecoin. So hopefully that gives you insight. All right,
And
we're at the
in terms of that competition with the banks and the stable coins, then what will it do to the banking system, do you think? Is there any?
competition breeds efficiency. It breeds innovation. We've seen that in the tech world since
Yep.
the 90s. We're seeing that now, I think, in the financial system. And I think that's, Jamie Dimon early on came out and said, Bitcoin was the pet rock.
So did
I think
Fink.
he
So did Fink. Yeah.
Yeah, I mean, they all said it because they recognize that this could disrupt their business and profitability. And so I think you're seeing an adoption to it. And so stablecoin, I think, is another stage up. So yeah. So I think
Thank you.
yeah, you're welcome. All right, anybody got anything else? We're at the top of the hour. Has this been helpful? All right, you guys see some nodding of the heads.
All good.
Fantastic.
All right. Well, we
All
will do
right.
it. We'll do it again tomorrow. Guys, be careful
Yep.
out there today. You know how every half an hour is a new news thing or shocker that comes out. So it's our new world that we live in now. But
That's right.
just be careful. And I use the charts and to guide me on when to get in and get out and how to look at the market. And Trent's looking at some long-term stuff. And so whether you're investing or you're trading, make sure you have a plan and stick to it and modify it to your risk tolerance. And you can always get a hold of us on the Discord. I have an office in the Platinum channel. Trent has an office in the regular channel, or get on Platinum Chat and talk. Paul's there quite a bit, and Scott and everybody. So have a good day. That's all I can say.
I will just
All
let
right.
you know, I will be posting this up on the website and on the Discord for you all to replay if you like. So if you do miss a day, you can come back and see this every day. So thank you all for joining us. I appreciate it. This is the first of many, and y'all take care and have a great day. See you.
Thanks a lot.
Bye-bye.
Thanks a
Have a
lot,
good day.
guys.
Bye.